A huge rally across international financial markets has been triggered by a tentative peace deal between the United States and Iran. Reports that the agreement will keep the vital Strait of Hormuz open allayed investors' concerns about a protracted disruption to the world's energy supplies. A significant improvement in market sentiment was brought about by the possibility of reduced geopolitical risk, which raised US and European futures as well as shares throughout Asia. The Nikkei in Japan increased 3%. The benchmark index for South Korea increased by 4.3%. And when investors shifted back into riskier assets, futures that tracked the S&P 500 and Nasdaq also saw increases. The energy sector experienced the largest market response. While US crude sank almost 5%, Brent crude lost 4% to almost $84 per barrel. The drop represents a considerable pullback from the top of more than $126 per barrel earlier this year. Even if oil is still above pre-conflict levels, global inflationary pressures are anticipated to be lessened by lower energy prices, especially for big importers like Europe and Japan. Analysts warn that there is still confusion around the state's shipping laws and the degree of harm to the area's energy infrastructure. Expectations are changing ahead of a critical week for central banks around the world due to the drop in oil prices. Interest rate decisions are scheduled to be announced by policymakers in the US, UK, Japan, Australia, and several other economies. Investors are lowering their expectations of additional monetary tightening as the dangers of energy-driven inflation diminish. Gold increased by about 2%, US Treasury yields decreased, and the dollar declined versus other major currencies. Although policymakers are anticipated to exercise caution until the agreement's durability is established, the peace pact provides central banks a possible reprieve from the inflation shock caused by the fighting.